Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, the EURUSD pair once again rebounded from the 50% corrective level at 1630. Declined to the 61% Fibonacci level at 1578. Rebounded from this level and returned to 1630. This was followed by another rebound from 1630, once again allowing traders to anticipate a decline toward the 1578 level. Consolidation above 1630 would allow for continued growth of the euro toward the next corrective level of 38% at 1.1682. The wave structure on the hourly chart currently remains relatively straightforward. The latest completed upward wave exceeded the previous peak by only a few points, while the latest downward wave, which has not yet been completed, broke below the previous low. Thus, the trend has shifted to bearish. The temporary ceasefire between Iran and the United States supported the bulls for a month, but now, 6 weeks later, it can be said that geopolitical developments are moving toward preserving the conflict. As we previously warned, the bulls were unable to maintain momentum without a full ceasefire in the Middle East. On the 4-hour chart, the pair rebounded from the 76% corrective level at 1.1617, but failed to continue either upward movement or initiate a decline. Thus, geopolitical developments continue to shift the pair's direction on a daily basis, which is why we currently recommend focusing primarily on the hourly chart. No emergent divergences are currently observed on any indicator. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair on Thursday rebounded from the resistance level 34.54-34.66, but then returned to this zone. Thus, the downward movement may resume toward the corrective levels of 34.08 and 33.49. Consolidation above 34.54, 34.66 would favor the British pound and the resumption of growth toward the resistance level of 1.3526. The wave structure shifted to a bearish outlook last week. The latest completed downward wave broke the previous low, while the new upward wave has not yet exceeded the previous peak. Geopolitical factors are currently supporting the bears, as the market has still not seen the signs of even a temporary memorandum of understanding between Iran and the United States. At the moment, the ceasefire remains in place, but the situation is gradually shifting toward escalation and a prolonged confrontation. On the 4-hour chart, the GBPUSD pair rebounded from the 23% Fibonacci retracement level at 33.27 and reversed in favor of the pound, advancing toward the 38% Fibonacci level at 34.29. A rebound from this level would favor the US dollar and a resumption of the decline toward 1.3327. Consolidation above 34.29 would allow for further growth of the pound. No emerging divergences are currently observed on any indicator.
That's all for today. See you online soon.